Welcome to This Week in Money. I'm Jim Goddard. Today, veteran trader Victor Adair runs down the major markets. He comments on silver and gold blasting through the roof, while copper had a nice calm upturn. Victor also looks at uranium and the energy sector as a major Arctic blast makes its way across much of Canada and deep into the U.S. The host of the podcast Steel News, Ann Vandersteel, visits us from Colorado to dig deep into the shock waves created in the stock markets by naked shorting. She believes the practice is a killer of jobs, investment, and economies, and would like to see regulators and politicians put a brake on naked shorting, or at least enforce the rules that exist on it now. Noted West Coast realtor Allan Angell gives us an extensive look at the sorry state of the housing market for most of Greater Vancouver and the Lower Mainland. He also gives you a look at how to find a decent real estate agent. We'll talk to Victor Adair right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in BC, but still very active in the markets. His website, victoradair.ca. Welcome back to This Week in Money.
Jim, it's always a pleasure to talk with you.
Victor, gold and silver especially making news this week, topping $100 US for the first time.
Yeah, certainly the metals have just been on a tear to the upside, the precious metals in particular. To put a number on it, I think we went out in New York on the front month future at about $103 an ounce. That will be up $13 an ounce on the week. Silver's up about 30% from where it was at the end of December. And where are we? We're like, three-quarters of the way through January. The gold price in New York today on the forward market, the futures markets, I should say, came close to $5,000 an ounce. We maybe settled about $20 shy of that on the February contract, but that would put us up about $350 on the week. So, you could wrap it up right there. Anything that happened in any of the other markets was much tamer than that. Oh, I should mention copper. Copper, not nearly as wild and crazy as the silver market, but we're just under $6 a pound in the COMEX copper market.
What happened in the stock markets?
Nothing. No, I'll tell you what, the stock markets, this was a short week in the United States, okay? Martin Luther King Day on Monday. And then, of course, everybody waiting with bated breath for Trump to show up and deliver his thoughts in Davos on Wednesday. So on Tuesday, ahead of that, there was a kind of a unique thing happened. The American stocks were down hard, the bond market was down hard, and the U.S. dollar was down hard. It was kind of the talk going around was that people were going to, start selling U.S. dollar assets. As sort of in reaction, to Trump being a bit belligerent with the rest of the world. So that was kind of the focus. When Trump said, I'm not going to use force to take over Greenland, well, that was exactly what the market wanted to hear. And within seconds of that, the stocks were bid higher. The U.S. dollar started to rally back a bit, and the bond markets came back a bit. So at the end of the week, the Dow was down about 300 points or so. The Toronto market at all-time highs here this Friday again. The Toronto composite market has just been on a tear since, April of last year. Anyway, up about 150 points. That put it at all-time highs at the end of the week.
What's happening on the energy front?
Energy was, I tell you what, one of the stories certainly on energy and front and center is the brutal winter storm that is hitting particularly the eastern central part of the United States. Natural gas prices are up about 35 to 40% this week. So it's just been a scorcher. I mean, I'll trade natural gas from time to time, and I certainly keep an eye on it. Over the years, I've learned that the people call it the widow maker for good reason. Any market, other than, silver, the wild child, but any market that can move 35-40% in a week. And, this is not a penny stock. This is the price of natural gas that people use to heat their homes. Anyway, a huge move in natural gas. WTI, we were $55 recently. We ended this week at about 61. One of the thoughts there is, Trump is sending an armada toward Iran. And I've been thinking here the last few days that the news out of Iran, well, there wasn't any, It just went so quiet. And I was thinking of that old Western movie saying, it's quiet out there, too quiet. Well, it was too quiet, but I think we have not heard the last of developments in Iran. And with that, we were up, $5, $6 from the lows we had in December, up about $2 on the week. And another aspect of the energy market, uranium. Now, we don't have a uranium futures contract that I can trade, but my sort of bellwether for that is Cameco. Cameco closed at about $124. That's up $8 on the week. That's an all-time high weekly close for Cameco. And that uranium bellwether, as I call it, is up 25% since the end of 2025, which would be, 3 weeks ago. So that's the energy market for you.
Anything else we should be keeping a close eye on right now?
I think the two other broad segments are the currency markets and the interest rate markets. They're certainly kind of hooked at the hip. The Canadian dollar is up about a penny on the week. And the Canada, I'll have to say, and I say this a lot, it just kind of tags along with what some of the other currencies are doing. The Australian dollar's been on a hell of a tear. The Swedish currency's been on a great tear here for, the past couple of months. It's just, Sweden is not one of the go-to currencies that I look at for trading, but it's being seen as sort of a safe haven. That's sort of almost like a junior Swiss franc. The U.S. dollar index closed at a 4-month low this week. I'm telling you, there's something I'm seeing here across asset classes, whether it's stocks or currencies or certainly the metals market. I think there's some Trump fatigue showing up, and people are going, something. It's been for instance, Jimmy, I've had an expression for years. I would say capital comes to America for safety and opportunity. Well, I'm not so sure. I think maybe lately, particularly this week with all the events around Greenland and Davos and that sort of thing, there is some Trump fatigue out there. We might be seeing, at the margin, at the very least, some selling of American assets, and that shows up in the weaker U.S. dollar. The other currency story on the week for me is the Japanese yen. The Japan, they're really deeply in debt, and they've got a new government. They're going to have another election here in about 10 days or so for the new lady, Takahiki, to get a mandate to go forward with a program. But the idea seems to be they want to go deeper into debt to try to get out of debt. And what is happening is the yen has been sort of the escape valve or the pressure valve. The yen's getting beat up as the market doesn't like the debt profile in Japan. And not surprisingly, we had some rumors both in Japan on Thursday night, our time, and then in America Friday on our time, intervention, both from the Japanese authorities and the American authorities. So the Japanese currency jumped higher, and that just kind of added to the woes on the dollar. So virtually all of the currencies are up against the U.S. dollar. I should point out the Chinese RMB is at a 3-year high against the U.S. dollar. So U.S. dollar sort of hated across the board. Interest rate market, very quickly, in the United States, the markets are pricing about 30 to 40 basis points of cuts from the Fed this year. So the market's backing away from the Fed doing cuts. And, of course, that's what it is today, and next week it could be a different story depending on who Trump appoints, or nominates, I should say, to be the new head of the Fed. But that's kind of a quick wrap of what happened this week, and I'm sure we'll be back with a lot more action next week.
Thank you so much, Victor, for being on This Week in Money.
Jim, it's always a pleasure.
My guest has been Victor Adair. His website, victoradair.ca. Coming up, Ann Vandersteel, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ann Vandersteel, host of Steel News, available on Rumble, X, Truth Social, YouTube, and many more sites. Her website is annvandersteel.com. Follow her on X at Ann Vandersteel, and welcome to This Week in Money.
Thanks, Jim. Great to be with you. I'm looking forward to this interview.
Where are you speaking to us from?
Currently, I'm in Denver, not my home, but we're out here helping family and working remotely as we can in media, as you know, enjoying a little change up of the seasons.
Can you tell us a bit about Steel News and where our listeners can catch it?
Certainly. Thank you for that opportunity. Steel News is hosted on my X platform at Ann Vandersteel. You can find all of the links at annvandersteel.com, which is several Rumble channels, a couple of YouTube channels, Getter, Facebook, LinkedIn, Twitch. But primarily, most of my users and listeners probably catch me on X. That is my biggest platform. I've got about 408,000 followers there. And we focus on the tyrannical reign of agency bureaucracy and how we can eliminate that and restore our republic and get back to the basics known as our Constitution.
This week, President Trump spoke at Davos at the World Economic Forum. What did you think of his speech and how it went over?
Well, it depends on who you are listening as the speech. So let's contextualize this in terms of his base, right? He definitely positioned the United States front and center, and I think he delivered a major speech focusing on our economic strength, the geopolitical strategy, and global leadership, as America has always wanted. Basically, as America goes, so goes the rest of the world, and he definitely pushed that. He also pushed some very controversial foreign policy themes by advocating for the United States claiming, over Greenland right now, right? He's sort of reigniting that geopolitical dispute with our European allies, and I'm not sure that we can really call them allies at this point because they've soaked us for NATO costs for years, and he's finally just trying to get that ship righted. But after, I would say, what they might consider hardline rhetoric, including, of course, threats of tariffs, tied to the support of his initiative to take Greenland, President Trump did back off on these tariffs, and instead he announced what he called a framework for cooperation on Arctic security with NATO. So between that and the Board of Peace that he has launched, this is an initiative aimed at overseeing the Gaza peace and reconstruction, claiming sort of broad international participation. But there were notable absences from that Board of Peace, from key Western allies. And so, he's had, that is, I think, unfolding rather rapidly. And people are looking at this saying, does this actually represent a new United Nations, so to speak? And does it sideline Israel's ability to weaponize what I would consider anti-Semitic tropes all the time when it's really the Israeli government and our intelligence communities collaborating along with MI6 to create havoc in order to control the trade routes. So I think he's looking at how he can integrate more into the BRICS paradigm and make every country sort of the same nationalistic view as we do, where make your own country great again. And when you shore up your own shores, so to speak, you can come to the bargaining table from a position of strength. So I think some people in the, primarily the European bloc was just not pleased because they fall under the New World Order, one world government, where President Trump is really trying to integrate countries as sovereign nations and acting cooperatively together.
Last week, you held a news conference outside the Security and Exchange Commission in Washington, D.C. Can you tell us about it?
Oh, certainly. That was a gangbuster press conference. I was representing, I was really hosting, should I say, and facilitating a news conference for MMTLP shareholders. which was a ticker that was never supposed to trade. It was supposed to be a Series A dividend placeholder from a reverse merger spinning off a private company. But what essentially happened was Wall Street, we don't know exactly who yet, approached FINRA to issue a ticker and allow this to trade on the over-the-counter exchange, which is really the Wild West out there. And as Wall Street has been known to do, they naked short sold the heck out of the stock and created a lot of artificial and synthetic shares in the millions that did not allow this stock, this ticker, to reconcile when it came to the reverse merger and the private spinoff, because these MMTLP shareholders were promised a share of the new spinoff company that was going private. And that was unable to be done because they couldn't reconcile all the shorts that were generated. And so we confronted this with the evidence that FOIA's Freedom of Information Act requests have actually generated to prove that the SEC was colluding with Wall Street to, in fact, protect the Wall Street broker dealers and market makers who shorted the stock into an oblivion and freeze out the real shareholders of the MMTLP Series A dividend from being able to exchange that and or get their money out. So Wall Street didn't like it. The SEC probably really didn't like it. Neither did FINRA, but we have the FOIA evidence. So I think it's just we're moving forward, and more people are coming forward that have been shorted, or should we say left out in the cold by the collusion between agencies that are supposed to protect us from the industries that they're regulating.
In the United States, the Uptick rule was removed in July of 2007. A modified version called the Alternative Uptick rule was implemented in 2010. In Canada, the Uptick rule was removed in September 2012 and has not been reinstated. In the U.S., was this the beginning of the Wild West for short sellers and naked shorters for counterfeit shares?
Yeah, really, frankly, that's structurally what exactly happened. And so for 70 years, the Uptick rule acted as a basic safety brake. It didn't ban short selling, Jim, but it did stop traders from piling on when the stock was already falling. So short sellers had to wait for a price uptick before selling again, which actually slowed panic, and it limited these coordinated attacks that you see happening out there with certain hedge funds that shall not be named because they are quite litigious. But when that rule was removed in July of 2007, just months before the financial crisis, as we all know, of 2008, that break that protected stocks totally disappeared. And at the same time, what we also saw was the algorithmic trading accelerating. So basically, computers were suddenly allowed to sell short into falling stock prices continuously, and they could do this, frankly, thousands of times per second. So the alternative uptick rule that returned back actually in 2010 only activates after stock has already dropped about 10% in a single day. That's basically damage control. It's not preventing really the catastrophe that ensues when you sell a stock short continually. And in Canada, they removed their uptick rule entirely in 2012 and they never reinstated it. So yeah, removing these guardrails definitely created what I would call a Wild West environment where speed and scale, and of course what we now know is the yellow-bellied, weak-kneed enforcement of the regulatory agencies allowed this abuse to flourish.
Our late dear friend Larry Ray with Recyclico referred to the shorters as predators. Would it be fair to say the predators, naked shorters, can destroy businesses, industries, and economies?
Absolutely. Larry was actually really blunt, but he was totally right with that. Traditional short selling, when it's done honestly and in moderation, it actually serves really a limited role. But the predatory short selling that we see go on day in and day out, especially when naked shorting is involved, that can destroy otherwise very viable companies. And markets today, they don't just reflect that reality, they can create it. So when aggressive short selling drives stocks down, like we see it happening all the time, this is the fallout that ensues. Lenders pull their credit. Partners will actually walk away because they don't see how they're going to get their money back. And capital dries up. So companies fail not because the business failed, but because the market was weaponized against them. And when this happens across the sectors like we see happening in biotech or mining or energy or technology, this damage, it goes far beyond shareholders. It actually destroys innovation. I mean, how many companies have gone out of business that had great innovation, like Meta Materials? Jobs get lost, and of course, long-standing economic growth, all destroyed by this naked short selling.
How widespread and profitable is naked shorting?
It's far more widespread than most people realize, Jim. It's very profitable because of how modern markets are actually operating. So think about this. With algorithmic trading at computer trading speed, shares are often sold before they're actually borrowed. And the sale happens first. The system assumes that the shares will be found later, and settlement is delayed for days. And any failure is dealt with after the price damage is already done. This is what happened with MMTLP. And from the market's point of view, supply increases instantly. And what happens when you have an instant increase in supply? Well, the price falls instantly. So when you add special exemptions for big market players like, the Wall Street guys, any loose rules that let them assume that shares exist so they can make it short sell them, trades handled behind the scenes instead of an open market, and these settlement systems that hide all of these imbalances, guess what? You end up with a market that quietly allows large amounts of shares to be sold that actually don't even exist. This is especially common and seen during stress. So this is why it's so profitable, because the impact is immediate on the market, immediate on the company's share price. But the problem is, again, the regulatory agencies' enforcement is way too slow, and the penalties around this are way too small. It becomes incredibly profitable to do naked short selling and make billions or millions when your penalty is far less than that.
If you sell a car you don't own, it's considered fraud. But when you sell stock you don't own, that's okay. When you counterfeit money, you go to jail. But when you counterfeit shares, that's all right. How do you square these circles?
Yeah, Jim, you really can't. At least you can't do it logically, because today's shares aren't paper certificates. They're electronic entries now, right? This is electronic trading, digital promises in a brokerage account. So when shares are sold that actually don't exist, those electronic IOUs trade exactly like real shares. They increase supply, they push prices down, and they dilute ownership. And the rules allowing this that were originally written to keep trading moving smoothly, not to flood the market with fake supply. But guess what? Over time, these exceptions have piled up. Enforcement has fallen behind technology, and what was meant to be a temporary became routine transactions. And this is how we ended up with this double standard. So for people, the everyday people like you and me, selling something you don't own is fraud. If we were to sell a car we didn't own, that's fraud. For powerful financial institutions, it's treated like, a bookkeeping problem maybe. They can fix it later, and it's rarely prosecuted. So this is where the injustice comes, and this is why a little guy is getting angry, and this is why the little guy is now having press conferences in front of the SEC.
When companies merge, all shorts get caught, exposed, and hung out to dry in a just world. An event like this could take down institutions. This is where we find out if regulators protect the shorters instead of the investors. Is this a fair analogy?
Oh, it absolutely is. Mergers and corporate actions force the system to finally count real shares. So when a company merges and it spins off assets like MMTLP did with Torchlight. So when these companies merge and they spin off assets or they go private, as in this case with NextBridge and Torchlight spinning off NextBridge Hydrocarbons, these companies and these electronic promises no longer actually work because the real shares have to be delivered. And that's when synthetic shares are exposed. So basically what I'm saying is if we had a truly fair market, that moment would be totally decisive. Institutions that sold these massive amounts of undeliverable shares would fail. And all of this we saw in a real world test with MMTLP. It was tied to the spin-off into a private company, NextBridge Hydrocarbons. And once it went private, all the short positions should have been forced to close. Instead, what happened, Jim, was the trading was halted unexpectedly just days before trading was supposed to end. And this is where it gets insane, and this is where the people have leverage, because through these FOIA-produced emails, the investors later learned that the SEC had actually been communicating with FINRA about stopping the S1 filing, followed by FINRA's U3 halt. Therefore, the shareholders, the legitimate ones, were frozen, and the short positions were never fully reconciled. So basically, for many of these MMTLP investors, it was the moment that the curtain was pulled back, showing that the system would intervene to manage institutional risk rather than allow accountability. And frankly, Jim, that's where the trust in all of this breaks down. And this is why you're seeing shareholders rise to the occasion and step up to the microphone.
When a heavily shorted company merges with another company, a potential massive short squeeze ensues. Are short squeezes a yin and yang natural cleansing process to cause shorts to cover their positions?
Well, they're supposed to, and under this existing law, the enforcement becomes really the issue. So several rules already prohibit naked short selling. Let's just kind of review them. Regulations show already requires brokers to locate the shares before shorting and to close out failures to deliver. Anti-manipulation statutes exist on the books. And in review of those under regulations show, you've got Rule 203B1, which requires the brokers to locate these shares before shorting. And then you've got Rule 204, which mandates the timely closeout of failures to deliver. The Exchange Act 9A prohibits this manipulation, and Exchange Act Section 10B and Rule 10B5 prohibit deceptive practices. But in practice, the reality of it is that these failures to deliver can be rolled forward. They can be hidden through derivative trading or delayed through settlement mechanics. And without these strict enforcements by the SEC and FINRA, these obligations remain theoretical instead of real. And of course, the critics are arguing, meaning we the people, the investors, are arguing that these rules are routinely bypassed because we see what's happening. Now that we understand they're rolling these failures to deliver, as in the case of MMTLP, we had 75 continuous consecutive days of rolling FTDs. They're resetting positions through options, and their internalization and off-exchange trading, settlement delays at the clearing firms, all of these things are basically what MMTLP investors are alleging these failures were never forced to close. And despite there was a corporate action on the books that anybody could have read, including the SEC and FINRA, that should have required reconciliation, the MMTLP showed what happens when enforcement fails at the moment it matters most. And this is why I submit to you, Jim, that many believe enforcement, not legislation, really is the core problem. And we see that not only in this agency environment, but we see it across the board here in our own elections down at the state level. Statutes simply aren't enforced.
If a client goes to their broker and says they want to short a specific stock, the broker needs to borrow the stock for their client to short it. If the broker accepts the short order from the client but does not borrow the stock, is a naked short created, and would the client know if they had a regular borrowed short or a naked short?
Oh, absolutely. They're not going to know. They're never told. In fact, when you have what you believe to be a share in your account and you're not trading it regularly and your broker goes to borrow that share and give it to somebody else to short, you're not told. There's absolutely no way. And this is what happened with the MMTLP. This is, again, why this textbook case is so incredibly powerful, because it proves that many people who own the stock have their shares borrowed. And they had no knowledge of it whatsoever. So for those people who thought they were buying shares when they were buying borrowed shares, they were left hanging in the wind with nothing. And this is the problem that exists today. That should not happen at all. And this is why the Uptick rule must be restored, because the brakes for selling stocks short simply don't exist.
Do bankers, brokers, and broker-dealers tend to create naked shorts, and could we see some of them go under?
Oh yeah, I absolutely think bankers and brokers are criminal in acting this way. Because let's just talk about the history, right? Let's look at Lehman Brothers. Here's a clean and clear example. Lehman didn't collapse overnight because of one bad trade, right? This is such a classic case. It collapsed because it was highly leveraged, deeply interconnected, and dependent on complex financial structures that masked real exposure. So here's what happened. When the confidence broke and the counterparties demanded the reconciliation, the real reconciliation, the balance sheet simply couldn't withstand it. And this is what many people forget, is that Lehman was considered too sophisticated to fail right up until it did. Now, fast forward to today. You've got large banks, you've got prime brokers and market makers sitting at the center of the equity markets, derivatives, commodities, securities, lending, clearing, and settlement. And if these regulators were to force simultaneous reconciliation of all the synthetic exposure that those aforementioned entities have, meaning every short position had to be backed by a real delivered share across equities, commodities, and derivatives at the same time, the stress would be enormous. Just like Lehman, the problem wouldn't be one bad actor. It would be systemic leverage, meaning real-world accountability. That's why this reform has been resisted, because honest enforcement wouldn't just expose bad trades, Jim. It would expose how much of the system depends on rolling obligations, the assumed liquidity, and the positions that only work as long as they're never forced to settle all at once.
Should overly short institutions be left to fail and where crimes have been committed, jail, not just the cost of doing business fines?
Yeah, absolutely. Historically, the fines for security violations have often been a fraction of the profits earned. And numerous SEC settlements show institutions paying millions, sometimes billions, after earning far more from the underlying activity. I mean, we could look at what happened with, Jamie Dimon over at his fabulous establishment. They got caught shorting silver through, paper ETFs and gold through paper ETFs. And they, while they made, probably billions and trillions on that, they got fined less than $1 billion. So when the penalties basically are predictable, it becomes the cost of doing business. They have no problem paying a minuscule fine when they're raking in money hand over fist.
Do regulators understand what's really going on in the markets, and do they actually care about shareholders?
Well, many individuals inside the agencies understand the mechanics of it, but systemically, regulators, they're incentivized to prioritize what I would call market stability over shareholder justice. That fear is forcing accountability, which could trigger what I would call probably cascading failures. Again, MMTLP, they had to stop it. They had to halt it and stop the S1 filing. This creates what we would call a moral hazard, right, where the system protects itself rather than the participants. And this is the playbook for agency bureaucracy across all industries. This is nothing immune. No one is immune from this when you have government agency regulators involved. They never protect the little guy. They're always about protecting the industry they so-called regulate.
To bring stability to security markets, should not only naked shorting be made illegal and the full uptick rule reinstated, but all shorting be made illegal?
Absolutely. You should ban naked shorting. You should enforce settlement and definitely restore the full uptick rule. How do we accomplish it? What reforms do we need, frankly? Well, these are accomplished through which we next need to be, which I already have, which is called statutory enforcement, regulatory restructuring, and technological transparency. We don't need new agencies, right? We can codify banned naked short selling with explicit statutory prohibition, not just SEC guidance. We can require pre-borrow verification. In other words, before any short sale is executed, impose strict liabilities on broker-dealers and prime brokers for any violation, including criminal penalties for willful failures to deliver, not just these minuscule civil fines. Got to enforce settlement discipline. The T+0 and a hard T+1, they absolutely must mandate real-time or same-day settlement using modern clearing technology. Money can move around at the speed of light, Jim. There's no need to hold it up. Eliminating chronic failure to deliver loopholes, including market maker exemptions. And of course, automatic trade buy-ins when settlement fails, no extensions. Public disclosure of all persistent FTDs by issuer and counterparty must be made. And of course, in restoring the full uptick rule, you've got to reinstate the original 1938 uptick rule, not the weakened alternative uptick trigger. You've got to require every short sale to execute only on a price increase, preventing this assassination of stocks and this downward manipulation. And they've got to apply this universally. You cannot have any exemptions for liquidity providers and all of this self-regulation conflicts. Remove all of it. The enforcement authority from FINRA where conflicts exist. Frankly, I think FINRA should be abolished. Got to establish independent audits of the DTCC, NSCC, and all clearing participants. You've got to prohibit this revolving door employment between regulators and regulated entities. You've got to increase transparency and public accountability and congressional oversight and whistleblower protection. All of these markets only function when shares are real. Settlements are final, and the price discovery is honest.
If all shorting was made illegal, would this put a bid under the markets and be super bullish for the stock markets and the economy?
Oh, I absolutely believe it would be. I think if you abandoned this naked short selling, would absolutely secure the investor confidence in the markets. And yeah, I think this would create a very bullish environment.
Is it time for the Trump administration to reinstate the full uptick rule, or even better, ban all shorting to save the stock markets from predators and naked shorters?
Absolutely. I think the path is totally clear. The administration could reinstate the full uptick rule. They could mandate real-time share verification. They could end market maker exemptions for the naked shorting. And they just need to do the basics. They've already got on the books, enforce regulation show without any exceptions, and require full transparency of all failure to deliver. These are executive and regulatory actions. You don't need acts of Congress for this, Jim. Structural reform restores trust. Trust restores capital formation. Capital formation restores economic strength. It's really that simple.
To clean up the securities markets, what would your message be to President Trump?
Simple. Clean up the plumbing of the markets. Protect the investors, not the predators.
Can you get that message to President Trump?
I'm certainly going to try. I know people that know him one hand away, so I'm going to pass this interview on and make sure that he sees this.
In his speech at Davos this week, President Trump alluded to the Dow hitting 50,000 and doubling. Could cleaning up the securities industry cause a market move like that?
Absolutely. Capital flows where trust exists, Jim. I mean, if you don't trust your market, are you going to put money in it? So let's get back to basics. Let's restore the trust, and the growth follows. Heck, Trump was even talking about the Dow 100,000 at Davos the other day. So I think with what I see, the folks at TMCG doing with respect to tokenizing their shares, and now you have, BlackRock and Larry Fink all talking about tokenization across the markets. They're looking for ways to make sure that naked shorting can happen.
Where can our listeners watch you on Steel News and follow you on social media?
Please go to @AnnVandersteel on all social media. You can follow me at AnnVandersteel.com, and all of my social media links are there, and you can find links to Steel News.
Ann, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Ann Vandersteel. She was speaking to us from Colorado. Coming up, Allan Angell, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Allan Angell, one of the top realtors in Canadian history. He's sold more than 4,000 properties. He's located in West Vancouver, BC, and online at the Angell.Group.com. That's spelled ANGELL Group.com. Allan, welcome back to This Week in Money.
Thank you kindly.
First of all, how are things going at Angell.Housing?
Well, the market has been, the last few years has been terrible, but we expanded our company. We opened 6 new offices, and having the amount of realtors we have, it's been okay. So I can't complain because my head office is at West Van, and we're not selling one house of realtors per year in West Van. So if that's the only office you had, we would probably had to close our doors.
You follow a large number of markets in the Lower Mainland and Metro Vancouver. Can you take some time with us and go through all of those markets, including the end of year 2025 stats?
Absolutely. I'll start up by telling you a little something about me. I started selling in 1972. I had a terrible stutter. I couldn't say I was going to be a lawyer, but nobody would hire me because they said, "Mr. Angell, you can't even say your name." So I became a realtor, and I did what all the agents in my office did. You go on tour in the morning, look at the houses, and then they come back and they drank a coffee all afternoon. I said, "Well, this is useless." And so I decided, well, what can I do to be better than anybody else? So the first thing I decided to do, I'm going to learn every house on the market. So my office is West Van, my main office is. So I would pick an area like the British properties, and I would spend a day going through drive by every active house in the market and every sold. So by the end of the time, I knew every house in West Vancouver on the market, and all the realtors in my office used to come to me. I need a house like this. And I would lay in bed at night and look at them all, and study them all. That's the first thing that I did. Second thing I did was probably the most important. I decided, well, I'm not a good speaker. I'm not a good salesperson. I can't talk anybody into anything. Sometimes I can't even say the person's name. So I developed. I got to get something that I can show them that they'll spend time looking at. So So I developed my system of stats. I said, I'm gonna do a system of stats which should really be great. That's what I did. So I knew everything about I knew all the areas, even, Langley, White Rock, Port Moody, all the ones at Vancouver, Whistler as well. And so I basically checked the sales, and I was absolutely amazed. I remember one of the offices we opened up, there was 6 agents there, so we just changed the name to Angell.Housing Associates, and they're quite successful. So I said, how many houses sold last year in your area? None of them knew. This was March of none of them knew. Every office we opened, none of them knew the exact stats. And I thought to myself, well, how can that be? How can these guys be that successful and not know what is going on in their area? So I said to them, I said, guys, last year, because this was in March of 24, last year, 2020, was the worst year in history in your area. I mean, that's something you should know, because basically the realtors are just about all the same. They go in and do an appraisal. Hardly ever was I the only guy in, unless they're old clients that sold before. They would have, I remember one house, they were having the 10 top realtors in there. And I said, well, that's ridiculous. So you get to know the realtors in your area. You get to know how they price their houses. There's one very successful realtor. He would price his house so high, sign them up for a year's time, but nobody would show it. So he's the only guy who would show it, because he says, I'll get them to take less. So the realtor just stayed away from even showing the house. But so he would say, well, listen, I'm the only guy even showing the house. You have to stay with me. Then their guys are so high that they get the listing. They're guaranteed to get that. They sign up for a year's time, like most of our mid to high-end houses are, and then they just gradually drop it down. The problem with doing these things is that when the market has been for the last 4 years, the market's dropping, the prices are dropping, so you start too high, you're losing money. So the first question you have to ask your realtor that you're looking at is, what exactly did the market do last year, or maybe the year before too? So if that realtor knows how many sales they had, where they are over the years, that's a great realtor. You should use that one, because he spends the time. It takes me 20 hours a week to go through all the areas. I go through all these areas I do, because I want to know is it the same in all the areas, or are some good and some slower. So that's what I do. And also, I work all over the place. So if you feel that you'd like to use me as a realtor, even though it could be like in Langley or it could be Vancouver East, I would work with my top realtor in the area to help you get the house sold. But at least you'll know exactly what the market is doing, because if you know that, and I can say to you, look at last year was the worst year in history, or the second or third worst, then you have to be careful about the price. You have to be very careful. So that makes me get a lower price when I list the houses, but it will sell. So that's so important. Anyway, I do all these areas. So I'm going to start off with the overall Greater Vancouver sales for 2025. Now, what I do on my chart, I have the year 2025, the sales for the year. Then I have my graph started. A lot of them started. Multiple started in 1980. By 1984, every house is on multiple. So that's when I started doing all the numbers from. So these stats go back. They go anywhere. I added a couple of areas every year. So basically, by 1991, I had all the areas. I had all the areas in the Lower Mainland. So I've been doing stats since that time on them. So I work out the average sales. I put down the worst year and the best year. So if you look at Greater Van, there was houses sold. There's a big difference between houses and apartments. There's no comparison. The apartment market is so much stronger than the housing market. But Greater Van sold 6,652 houses last year. 66.52. The worst year was 75.22. So last year was the worst year in history in the Greater Vancouver. The average year is 13,400, and the best year is 24,000 homes, and we had 652. So that was the worst year in history. The next area I do is West Van. West Vancouver sold 361 houses last year. The average year is in the 700s. The best year is over 1,200. The worst year was 218, which was the worst year since multiple started until this past year. 321. So we had 361, 321. The average over 7, and the best over 12. That was one that didn't have the worst year. North Vancouver, 687 houses. The average year is 1,204. The worst year is 683. So they were 4 sales above the worst year. The best year, 2,176. So it's interesting how you can see how it can be such a spread from the best year. You know, it's Greater Vancouver. I said 23,957, 24,000, and this last year was 666.52. I mean, those are stats you can't believe, but I think they're so important if you're trying to get your house sold. And I do it for not only these areas, but I take West Van. I take all the sub areas in West Van. You know, British Properties, Caulfield, Eagle Harbor, I do the same thing for all the areas, so I can tell you exactly what area you're in and what your sales record is doing. So that's something else I love to do. It got so bad. I was a golfer at Capilano when I started. I was an 8 handicap, but then I got so busy at work. I went up a lot higher. But I got to the point where I said, I think I'd rather do my stats than golf. So obviously something wrong with me because I still love to work. So Vancouver West, 637 this year. Worst year, 697. Average 1,500, and the best 2,800 plus. So it was the worst year in Vancouver West history. Vancouver East, 769, and the worst year 871. Average year 1969, and the best year 4,078. So again, the worst year in history. Now, as it turns out, all the areas I do 12 areas. 10 of them have had the worst year ever this past year. 10. The only 2 that didn't was West and North Van. I mean, West Van was only 4 above the worst year. And as I said, and we were 321 for West Van and 361. They were the 2 best areas in the Lower Mainland. Vancouver East, I think 769 and 871, as I said. Burnaby, 482 houses sold. Worst year, 565, so it's 80 sales less than the worst year. Average 1193, and the best year 2254. So it's a trend, as I said. They're all doing their Richmond, for example, 625, worst year 747, 1583 the best year, and 1583 an average year, and 2916 is the highest year. Now, I've added in Squamish too, only because I sold a project called Furry Creek in 1999. It's the best retirement waterfront area in the Lower Mainland. I sold my big house last year, and I moved in here because you're right on the water. It's a 20-minute drive to get to Caulfield in West Vancouver. When I drove to West, it was a 37-minute drive to Worcester, so I'm quite happy. And you're right, you're only 10 feet above the water. So I did Squamish because it's a 12-minute drive away. But Squamish that doesn't follow the pattern. It's only a small area, so it's the only area that it also didn't have the worst year. But there's so few sales. There were 189 sales, so that really doesn't. I just do that because I'm close to it. Then the next area, Tri-Cities area, 959 sold. The worst, 991. Average 2,072. The best year 38.55. So I mean, think about that. 38.55 in 2072, and they had under 1,000 sales. Maple Ridge, 656 houses. The worst year was 813. The average year is 1174, and the best year is 1700. White Rock, 633 compared to 750 for the worst year, 1207 for the average year, and 2018. So Langley, 1,034. The worst year, 1179. The average year, 1598, and 2261 for the best year. Abbotsford, 729. Worst year, 838. Average year, 1337, and the best year, over 2048. So it's interesting. So ignoring Squamish because it's such a small number of houses, West and North Van are just slightly above the worst year. But all the rest are having the, and when you look at, even compared to an average price, I mean, Greater Vancouver is 66.52, average is 13,417. Vancouver West 637, the average is 1503. It's amazing that we're not even close to an average year, let alone the best year. Now, the big difference is in the apartments. I look at the apartments, and Greater Vancouver had 16,799, so it's close to 17,000. The worst year is 8,600. The average year is 1750. So they're 1750. They're almost at an average year, whereas and they're twice the worst year. The best year is 29,000 plus. West Van at 189 apartments. The worst year is 148. So we're above the worst year. The average is 248, and 335 is the best. North Vancouver, the worst year is 726. They had 1321, and the average is 1334. So they're just about at average. Vancouver West is the only other area I do with apartments. 3,671. The worst year was 2426. The average is 4522, and 7,000 is the best year. So there's a general pattern right there, and so it's basically the same all over. Last year will go down as being the worst year we've ever had. But the strange thing is that people talk about the governments cause. I've been around for 3 huge falls. Governments caused them all. What's basically happened when they stopped the foreign buyers in 22, it just destroyed it. If you look at all the areas, 2018 was the worst year, and then the last 4 years was the second, third, fourth, and fifth. So we've had the last 4 right now. 10 of them are now the worst year, and 2018 is the second worst year. So it just shows you, since the government changed the foreign buyers. Like I used to sell 27% of my houses to Americans, Iranians, or Chinese. Now, people may be happy about that. They don't, they think, well, they're driving up the prices. But the truth of the matter is, it hasn't been what happened in 2018. 2018, we had a total crash. 2008 was another terrible year too. And when houses were dropping from 9 million down to 4 million at that time. And so if your realtor has all the stats, like I knew 2018 was going to be a terrible year, because I looked in 2016 in January, I looked at the sales every month compared to the average. They were twice the average. I remember in January, they had 106, and the average was 52. They were twice. All areas were twice as much as the average. Every month, it dropped. By June, it was equal. 69 sales and 67 sales. So that's when the market ended, June of 16. So I knew it was just going, and it got worse every single month, lower than the average. So by 18, 2018, we just had a terrible year. And but if you do your stats and the realtor knows what they're doing, they can show you what the market's about to do. So I knew, as I said, I knew in June of 16 that the market was going to crash. It was coming down. Every month after June 16 was lower than the average. This is what the stats do. Now, the board puts out their other stats, and there's good examples, but the trouble with the board stats is that they tell you at the end of the month, so it's now January. By February the 1st, they'll put out the sales for the month of January. But I know you don't get the final sales until about the 21st of the next month. There are always deals that are long, so they're sold they may be sold in January, but they're not reported till as far as back as January the 21st. And what that does, I'll give you the best example of it. West Vancouver sales in December, the average is 35 sales over all the years. They reported 33 sales, so you look at that and think, oh, that's okay, we're only two book. But when you look at the actual sales, what I do, I look at every sale and see when that was sold. Of the 33 sales, only 17 were done in December. 17. So it was half the average. Half of the average. That's how bad the market was. The other sales came from, they're supposed to have them in a certain time, but they came in October, November, and were handed in December. So the market was so far out. By the end of the year, you're very close because you just missed the, like January 1st to 21st, you missed those sales in there, so it's only a few. But if you want to know what the market is doing right now, which is so important, that's what a realtor should know. He should know how to do the stats properly. So it's just, knowledge is the key. I learned, what I would do too, and I put ads in the North Shore News for the first time. They didn't have a real estate section. So I went there and I had 12 houses and I put a full page ad in. And I told them, everybody's going to want to join the North Shore News because when you have your ads, and we had I was at Block Brothers and we had our ads in the Province and the Sun, those little small ads. But when they see that I've got houses, huge pictures, 12 houses on page, this is going to boom. Everybody will be in your newspaper. And sure enough, in a short time I had 4 pages of ads in there. So, there's ways, you have to find ways. Social media is the king now. You do well if you're on social media, but really, it helps you list houses. But honestly, I was on for 3 years. I'm older. My clients are older. None of them are on social media at all. They don't pay attention to it. But there's a lot of people do. The young people do, and so they might call you because you're on social media. But my partner and I, we haven't found that great to sell houses with. It's interesting too. I checked the sales, the high sales. 44 million is the highest sales in Vancouver. Worcester is 38. Vancouver, the MLS was 22, but Malcolm and I both had there were 2 sales in West Van, 30 and 32 in dollars. My partner and I sold both of those. So real estate is such an interesting job because it's life, absolutely life. And as I said, real estate is my life. I work every day at my desk. If I don't have any appointments, I spend all day. I only go downstairs to eat, and then I'm doing this. But really, don't make the mistake, and I hate to say this for new builders, because with the market as it is now, when you look at 4 of the worst 5 years have been the last 4 years, and 2018 is the other one. I mean, you've got to have the best realtor you can possibly have. They've got to be sharp on the price, but the trouble with this, you go in for appraisals, and I mean, the house that I went in, you said they're having 10 people in, and the house was in the 4s, and I met the husband walking around the house. His wife hadn't arrived yet, and he wasn't my type of person, and so wife home, and they said, well, you're the first one we're calling in 10. They ended up only calling in 9. But I told them the truth, and then I said, well, I'm not really interested in your house. If you're going to have in 10 realtors, it's going to be too high, so it's going to take 12 months to sell or something. So I said no. A week later, I got a call from them, and they said, Mr. Angell, the only one my husband wants is you. The other ones, all the other ones were blowing smoke, and he knew that. So I got the house. So sometimes the truth actually helps. Most often, though, people want to go with the realtor that says the highest price. But when we have a falling market, that's the worst thing you can do, because you're just following the market down. So right now, and everybody says it's a terrible time to sell. Well, you can argue it could be a terrible time to sell, but don't forget, you're selling for less and you're buying for less. But it's a terrible time to sell, because if you start too high, you're going to get less money than you were supposed to get. That's the key. Check out your realtors. Just because your best friend's son just started in the business, you don't need, like, we opened 6 offices, and we lost a few realtors because the ones that were brand new were starving to death. Like, they didn't do a sale. I mean, you look at West Van houses, we had 359 houses. Oh, no, I think, yeah, it's up to 361 now. 361 houses sold. There's 785 realtors in West Van, and we were the best of all the areas. So please, people, if I can help you out, don't hesitate to call me, and we can just have a general talk. If you're interested in me coming out and help you, I'll bring along my top realtor in the area, and we will do a call list. Then I'll make sure you have all the information. You get the best price you get. Normally, I tell people the price. I sell more houses above the price that I say than below. But you have to check every sale that goes through, because the realtors is so slow, they don't pay attention to it. I check every sale that goes through, because I need to know, if you have your house on for 8.9, you sell it for 7.5, that's just lowered the prices of all the houses in that range. So the realtors have to spend research time beyond belief now. And that's the trouble. I had a chap who came to my office a month ago. He wanted to be a realtor. He says, I hear you can make lots of money. I said, yes, you can if you're successful. He's the only thing I don't want to do. I don't want to work weekends, Saturday or Sunday. And I said, how old are you? He was 25. I said, well, son, you can't be a realtor. If you're not prepared to spend the hours you have to work, it's a waste of time. The way the market is right now, if you don't work 12 hours a day, I mean, when I started in 72, I told my wife, no kids, no holidays, no days off. I didn't do any. I still work. It's every day now. I still work every single day. And so if you're not prepared to do that, if you just want to be a part-time realtor, you can. But guys, spend time to learn. And just because they're the best realtor in the area, the 2 stories I told you about, 2 of the top guys, one lives for a year and the other one lives so high you don't want to show his house. So just because they're the best doesn't mean that they have more knowledge about the market. And right now you need to have the knowledge. So listen to the one that knows his stats, and that's what you have to do. Or just what you can do. I'm very easy to talk to. Just call me at my 778-888-7474 and say, I live in Maple Ridge. What's the market doing? Because I upgrade my stats every Friday and Saturday. So I always know what's going on in every area there. I remember when I started doing all this, the realtors would call me and say, well, where did you get your stats from? Well, I get them from the MLS. He says, yeah, but they're not the same. I said, well, that's because they only take the stats for first of the month. Well, why does your stats have to be different than everybody else? Because it may be the number 1 realtor in Canada in 8 years. Nobody's done that. And so you pay a price, because, I mean, I had 40 listings by April. For 17 years, I got over 50 listings for a time. Now, the amount of work, I never saw my family. The best thing I did, I bought a Walt Disney timeshare in Florida. I took my kids. I bought it when they were 2, 4, and 6. I bought that. I took them out of school if they were in school on December the 1st, and they stayed there a whole month because first 2 weeks in Walt Disney World, this quiet school still in. So they had a great life by doing that, and that enjoyed. My kids actually lived on over the years, over 2 years in Walt Disney World site. But as I said, real estate is my job. I'm still obsessed for it. I'm excited, and I don't care about the price. I'm putting a place on next week, an apartment for $700 and something. The old days, I wanted to sell the most expensive houses, and I did in most of the areas. But now I just like doing the deals. You know how nice it is to drive around an area and say, I've sold a house on every street in West Vancouver, and then I go through my list, and I say, I like those people. I talk to them. My biggest client I have, I sold them 65 houses. I met them in 1973, and I really liked them. And I said, I'll tell you what. I said, I'll tell you the houses you have to buy, and I'll tell you when to sell them. They only moved 4 times, but I said, that house you buy, and we'll hold it. I'll tell you when to sell it. I remember in the 70s, I sold Jimmy Pattison. He has the big house in the properties. He had this older house next door. Big. It was just a tear down. Even then it was. And I sold it for him, and he said to me, Mr. Angell, you're going to be a very successful realtor. I mean, he's look at him. He's still working. Only time I see him now is at the golf club. But real estate is my life. If you need some information, don't hesitate to call me, because if I have some time, I'll tell you what is going on. Because it's not that the other realtors are bad. They were never taught the right way. I did this because I stuttered so bad. I mean, I couldn't say a person's name. If the name was Brown, I could ask for Mr. Black, and Mr. Brown never came to the phone. My wife had to make so many of my calls and ask for the party I wanted to talk to. But it's in my blood. That's all I do. So please, I'm here. If you need something, just call me and talk about the market. I'll tell you what is going on. Then if you have a realtor, and if you don't want me to help you have a realtor, ask him, tell me the truth about the market. How many sales have we had this year? That person should know. That person should know this is his business to tell you, give you the best advice. Not go in there and say, well, I can get you this. Well, that's probably the wrong person. Test out his knowledge. What does he know about my areas? I live in Coquitlam. I sold a house in Coquitlam last year, and then I sold one on Vancouver, the island. I'm all over the place. But I love this business. So please do not hesitate to call me. Angell.Housing and Associates is the name of the company, and my West Vancouver. And I have offices or realtors all over the place, all through the Lower Mainland. And 778-888-7474. Please, I would love to talk to you and tell you what is going on. I thank you kindly.
Allan, thank you so much for being on This Week in Money.
Thank you, Jim. As I said, you know me, I'm crazy. I love this business. Okay, you have a good day.
My guest has been Allan Angell, one of the top 10 realtors in Canada. He has sold more than 4,000 properties. And that wraps up our show for this week. We'd like to thank our guests, Victor Adair, Ann Vandersteel, and Allan Angell. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen.